Good morning friends and welcome to the pre-market view. We've seen fall across the global markets, wherein US markets were down about 0.4 to 0.5% as the probability of tapering has now increased and the bond yields continue to spike up in US and they closed at about 2.87, and now there are indications that there would be further increase in the bond yields to about 3.5 to almost 4%, which does not bode well for the overall liquidity situation in the global markets. And we are seeing sell-off across most of the emerging markets, and particularly the bond yields in the emerging markets have been going up, which is definitely quite negative for the equity markets, because they have a double whammy of the flows being pulled out as well as pressure on the currency. And this phenomena is not only confined to India, but most of the emerging markets are suffering from this syndrome. European markets too were down anywhere from 0.5% to almost about 1.5%. No major economic data points to look at. And when we look at the Asian markets today morning, Nikkei is down almost about 0.6%. Hang Seng is down 0.25%. Most of the other Asian markets are weak. And SGX Nifty is suggesting that we are going to open up about 60 odd points down, somewhere around 53.50. Also, Brent crude continues to remain about 109, 110 levels. And back home we had a carnage in our own markets, and we had rupee seeing a single day largest fall of 1.50, and it closed at about 63.16. 10-year bond yields have spiked up to almost about 9.15, and there is no respite, and the equity markets, both Nifty and Sensex, were down, with majority of the sectors passing through a lot of pain. There is a sense of capitulation as far as retail investors are concerned, but we are yet to see this kind of a capitulation in the FI's money, because the flows are not suggesting that the selling is over. Every day we are seeing a selling figure of about 500-600 crore in the cash market and about 800 to 1000 crore in the future index market. On that note, let me invite Shaival to take us through important F&O cues, data and strategies that we can have in the F&O markets.
Good morning friends, let's have a view at derivatives. Friends, in spite of the carnage in the market and FIs being net seller for past 2 days, yesterday we have seen some long positions happening in the market below mark of 5,400, and due to which we have seen that during last hour of trade market has bounced back sharply and closed finally above 5,400 mark. And during this course of time we have seen that the put call ratio has further decreased and is at 0.89. Now, talking about the options activity, friends, we have seen that the focus has shifted from 5,500 and 5,400 put to 5,300, 5,200 and 5,100 put option, whereas on the call side the same thing has been witnessed from 5,800 call option towards 5,500, 5,400 and 5,700 call option. Now, this is for second day in a row that we have seen that the implied volatility have shot up significantly, which has been indicating yes, there would be selling pressure emerging in the market at higher levels. And as we are trading below our weekly VWAP, our bias for the market continues to remain negative. Also, if market closes below 5,400 on closing, market closes below 5,400, then further downside can be seen. From intraday perspective, friends, PFC is looking weak, so one can go short by maintaining a stop loss of 111 rupees 90 paisa. Thank you.
Here are the important news and events that we are tracking today. First of all, the 10-year bond yields have spiked up to almost about 9.25%, and from about 7.25% about a month back, now the yields are 9.25. So almost there is a 200 basis point increase in the bond yield, which is definitely negative for the overall equity markets as well as for the companies which have to borrow from the market, and the overall impact on the banking system is going to be huge. And as per the indications from the chairman of Union Bank, the mark-to-market losses to the banks on account of the treasury losses could be about 40 to 45,000 crore looking at the current yield. So we are seeing a lot of negative sentiment towards the banking stocks because of the combination of the bond yields going up, the increased probability of the NPLs. So we think that there is going to be a negative bias for the overall banking sector for the next few days. Tata Steel is going to produce about 1 million tons of iron ore from its project in Canada during the current fiscal, which will boost its raw material supplies to the European operations. And Sharekhan Communications, some positive news as Mr. Anjan Lahiri, who was the erstwhile head of the IT services for Mindtree, has joined the board of Sharekhan. So one can expect some positive reaction in Sharekhan Communications stock. The government has notified a higher duty for the high-end plasma TV at about 36% because of the higher import that we are seeing over the past couple of years. So basically the government seems to be desperate to control the imports, particularly of the items which are not essential items. So plasma TV would be one of them. We've already seen the import duty hike on gold and silver. So you can expect some more measures on account of that, which is basically going to help some of the domestic companies. And in case of other news development, the UK based Diageo has made an open offer for acquiring shares worth about 16 crore for the Vijay Mallya's Pioneer Distilleries, which is in line with their overall deal which they have entered into. And for Eros International, some update as the Turner International JV between Eros International and Turner has launched HBO Defined, and HBO hits on two of its largest digital cable platforms, and they've got a good response. Initially this is going to be made available free, and we think that there could be some positive reaction in the Eros International stock in the short run. And in case of Tata Power and Adani Power, some kind of a positive sentimental effect as Deepak Parekh committee, which was looking into the tariff for the ultra mega power project, has submitted its report saying that because of the higher cost of the imported coal, the tariff has to be adjusted to the tune of about 58 paisa, and it has to be reviewed on a dynamic basis for the benefits earned from the company's own Indonesian mines. So some amount of positive relief for some of the companies like Tata Power and Adani Power. We've seen the stocks reacting, but we think that there is a case for some more upside. Tata Power, based on this development, we think that one can go long there with a stop loss of 73.5 and a target of about 78 to 80. And Fortis Healthcare, some positive news as the company is set to sell its Hong Kong arm Quality Healthcare Medical Services for about $300 million. So one can go long on Fortis with a stop loss of 93 and a target of about 98 to 100. And Hexaware, there are reports that the Baring Private Equity Partners is set to buy the IT services from Hexaware Technology in a deal estimated at about $400 million. So one can go long on Hexaware, a stop loss of 121 and a target of 128 to 130. The company has denied this particular report, but we have seen that in the media it's been hitting the news for many days, and there is something which is brewing in this particular company, so one can do this transaction. That's it from all of us, friends. Have a great trading session and see you tomorrow at the same time.